Hello, welcome again to FAIRtax Power Radio. I'm Bob Paxton.
Bob Scarborough.
We are the FAIRtax Guys. There we go. I'm now using my Kennedy Airport, TWA hotel background there. How cool is that?
He's a
Yes,
world traveler, ladies and gentlemen. He travels all over the world by trains, planes, and automobiles and
I
boats.
trying to sell the fair tax and get people to realize that they don't need to live under the oppressive income tax regime. We've got a better way to do that. So
Yep.
we didn't mention this last time, even though this recording and the last week's show was recorded in the same session. You're on Grandpa watch now, huh?
Yeah. It'll be baby grandbaby number two on the order of January 16th or so.
Yeah.
We'll,
We
we'll
are
see.
recording this on January 16th. It'll stream a little over a week later, but hopefully by that time you will be Grandpa again.
Yep, you'll see me with a bigger smile on my face than I have when we're talking about the fair tax.
All right, good idea. All right, well, let's get going here into our weekly Congress.gov segment. The congressional session is now well underway, and the Congress critters are back well with their hands out, taking lobbyist cash to make changes to the tax code. And we will start today's session with H.R. 7034. Representative Craig Goldman from Texas 12 is behind this one to amend the Internal Revenue Code to eliminate the dollar limitations on the exclusion of gain from sales of principal residences and for other purposes. Got that?
Yep. Somebody might be able to find another use for that. Dollar limitations on the exclusion of gain from sales of principal residences. That means all the people that are getting ready to sell their primary house that they've been in and had the kids in and lived in, and they're downsizing. And here comes this bill that will somehow work to eliminate limitations in the
Well,
dollar.
obviously, real estate is something that appreciates. If you held your house for any length of time, it's worth more than you paid for it. And so the gain that you make, the difference in value of your house between what you paid for it and what you get for it when you can sell it, that's taxable income. And now, but apparently some of that gain is excluded from taxes. And now the this bill wants to eliminate those limitations on how much you can exclude from gains from the sale of your principal residence and for other purposes. You'll have to get Representative Goldman to explain that to you. He has a grand total, get this, of zero co-sponsors for that, but
Yeah.
it's in the hopper there. HR 7034.
It was introduced
Oh, mercy.
days before our recording. So it was introduced, what would that be, last Tuesday?
113 was the date that was introduced.
He hadn't had time to get around. He's got it up there, uh, introduced and referred to the House Committee on Ways and Means. So hopefully he'll have a few people involved in that one.
All right,
Maybe.
well, let's move on. This one's from the Senate side again. Senator Klobuchar, Minnesota, Senate Bill 3615. This is a bill to amend the Internal Revenue Code to establish an exception for multi-employer plan participants to the requirement for automatic enrollment. Now, I can't tell from just reading that little description what kind of plans they're talking about. It's probably insurance plans and automatic enroll. Apparently, if you got multi-employers, you're moonlighting at a couple of places, and you have to be automatically enrolled in these plans. But it doesn't make any sense to be enrolled in two different ones. Senator Klobuchar wants to try to figure why is that in the tax code at all anyway? Why don't we just worry about collecting the money the government needs? But the multi-employer plan participants to the requirements for automatic enrollment, they want to establish an exception to that. Okay.
I think the challenge is wresting control of our elected representatives from the lobbyists because it costs so much to run an election or a re-election campaign. Once you get in there, you're on the treadmill. If you don't keep running and raising money or figuring out a way to, to
Oh yeah. we have looked at times at just how expensive, especially a hotly contested Senate race would be. I mean, you're talking six, seven, I mean, eight, 10, $12 million to do that for all the advertising they have to buy and this stuff like that. It's just crazy. And of course, the lobbyists come around with that kind of cash, and they want tax favors for it, and all of that corruption. I'll call it for what it is. That corruption goes away with the fair tax. I mean, you just don't have that kind of junk going on when you're paying a consumption tax at the cash register rather than dealing with the incredibly complex income tax code that we've got today. That's nuts. Okay, let's move on. HR 6999, Representative Max Miller of Ohio wants to amend the Internal Revenue Code to repeal the limitation on deductions for personal casualty losses and to provide for increased taxpayer relief with respect to theft losses involving fraud, deceit, or misrepresentation. Apparently, if you have a casualty loss of some kind, that's deductible on your income tax, but apparently there's some limitations on how much of a deduction you can take for that. And this bill wants to repeal that limitation on deductions for personal casualty losses and provide for increased taxpayer relief with respect to theft losses involving fraud, deceit, or again, what's that doing in the tax code? Why don't we just collect the money we need and go on?
Yeah, and this is what makes it so simple. And I think sometimes it's so simple that and basic that folks have a hard time wrapping their head around just how it works. You just go to the cash register at your store, you're buying something brand new, whatever it is you're getting, wiper blades for your car or groceries or anything like that. Hey, and the fair tax appears on the receipt.
It does.
Easy
All
peasy.
right. Let's keep going. Number 4 on our list for today is from Representative Max Miller. Again, Ohio number 7, the same guy that did the last one. He's busy. The lobbyists are knocking on his door. He wants to amend the Internal Revenue Code to reinstate the rules for wagering losses. I guess the big NFL. I don't know if you're allowed to say That's a Super Bowl is a copyrighted term. So there's limitations on how you could use. You run into that with your advertisers up there that they won't let you reference that by name. But it's coming up. By the time this streams, it will have been passed. But the college football national championship is coming. There's going to be a lot of money wagered here in the next few weeks. And Representative Miller wants to reinstate the rules for wagering losses. I guess he's planning on betting on the wrong side.
Maybe that's historically how his days have gone in the past.
Oh, mercy. Okay, one more. This is Representative Josh Gottenheimer, New Jersey, HR 6979. He wants to amend the Internal Revenue Code to provide for youth sports to establish a grant program for recreational youth sports and for other purposes. Again, what is that doing in the tax code?
Well,
why can't, if you want to provide a grant program for recreational youth sports, which is a noble goal, why don't you just pass that as a standalone piece of legislation? Why do you have to put that in the tax code? That doesn't make any sense.
Again, it's probably, if you went to a local community, you might get some help in the form of a grant from the state or a sports grant or something, or maybe there's economic development within the community to go to a federal level to get something like that done. How many of these do you think there are? Or is this going to cover more than just Representative Gottheimer's district there in New Jersey?
I don't know. But anyway, we just highlight every week what the Congress critter is trying to do to the tax code and point out that's the reason it is so complicated. That's the reason it is so cumbersome. That's the reason nobody understands it. That's the reason it is so difficult and so expensive to comply with. And that's the reason we need to get rid of it and replace it with a fair tax. Okay, we need to move on here. We got about a little over 18 minutes to get through the rest of our What's Wrong with the Income Tax list. And this one is a big one in my book. the AI program we asked to come up with the top 10 things wrong with the income tax listed. This is number 8, but I'd put this at the top of the list. Privacy intrusion. The income tax system requires detailed personal and financial disclosure to the government. Right. I didn't go get my cheer wine. Anyway, we're raising concerns about overreach and data security. The government has just troves and troves of personal, private, sensitive information about you that you are required by law to provide on a tax return year after year after year. I'm just not comfortable with the government collecting all that private information about me, where it can be sold, where it can be hacked, where it can be leaked. It just makes me uncomfortable that they've got it, and under the fair tax, they don't need it and they don't get it anymore.
Well, and their website will tell you just how safe your information is on their website. Taxpayer Bill of Rights that's out there. You have the right to confidentiality, and to expect that IRS actions are not more intrusive than necessary.
Yeah, that's the official line, but that's not what happens. We all know what happened when ProPublica got a hold of the tax returns of Jeff Bezos and Elon Musk, and of course Donald Trump's tax returns were famously stolen and leaked. The government should not have that information about you. I mean, and this is the kind of information that is, I guess, your medical records and your financial records are probably the most sensitive personal information anybody can have. It's none of anybody's business what's going on in either of those departments, and you've got to disclose. I mean, every intimate detail of your personal finances ends up on a tax return at the government in a computer somewhere that, again, is not secure despite what they tell you about it. And it's just wrong that the government has all this data about you. We need to have a tax system where the government doesn't need this data about you. Oh, we got one. It's HR 25, the fair tax. Let's pass it, folks, and get rid of this awful, broken income tax system.
Absolutely. Ready to do it. HR 25. Don't forget to tell your congressman and your senators this election cycle about whoever's running. They need to know. They need to take a look at it, and they need to sign that pledge we've talked about many times.
Indeed. Well, Steve Hayes is right. He's mentioned this several times that it's going to take someone with a bully pulpit the size of the president of the United States to get onto this thing. And when the Congress critters, start opposing getting rid of the income tax system, and they will, because they're making a lot of money off of it. And when they start opposing it, he's going to come in and embarrass them and say, listen, you're for all this stuff, and I'm going to make sure everybody in your district knows that you want to keep your hand in their pocket before they get their paycheck. You want to keep collecting all this private information about them that the government really has no business knowing in the first place. And hopefully that'll happen. But the privacy stuff associated with the income tax is a really, really big reason that we need to get rid of it, because the government should not have that information on people. It's just not right. And we can collect the money that the government needs to operate without collecting all that information about you if we would just simply pass HR 25, the fair tax.
Absolutely. All right. The next one on our list of 10 commonly cited criticisms of the U.S. federal income tax system from various research services and sources. Number 9, regressive elements in broader context. While progressive on paper, features like payroll tax caps and investment preferences make effective rates lower for the ultra wealthy, reducing overall progressivity.
Now, progressivity, again, that is the term. We're not talking about a political ideology here when you're talking about a progressive tax code. A progressive tax code is one where the tax burden is distributed fairly based on people's ability to pay it. A regressive tax is one that lower income people have to pay at a higher percentage than higher income people do. And but again, the tax code, as we mentioned every week here on FairtaX Power Radio, is riddled with all these exemptions and loopholes and deductions that will favor the people who, again, can make political contributions to buy this favorable tax treatment. And again, it mentioned the payroll tax cap here, the AI program did. Your wages are subject to the payroll taxes that support Social Security and Medicare, but only up to a certain level. If you make above, I think it's $168,000. Anything you make above that is not subject to that tax, which means that people that are below that level are paying Social Security tax on every dime they make. If you're making more than that, you're not paying that tax on every dime you make. That's certainly favoring the higher income people. Investment are taxed at a different rate than ordinary income. That's usually a pretty good thing because investment drives the economy. And so the tax system wants to try to, as best it can, encourage investment by taxing it at a lower rate. But how about you tax it at a zero rate and see what happens? That's what we get with a fair tax.
How about that? Wouldn't that be something? Everybody pays what they're purchasing as opposed to what they're going to be able to finagle into their tax return.
Yeah, again, we mentioned earlier Donald Trump's tax returns were stolen and leaked, and people were just their jaws dropped open at how little tax he actually paid. But nobody, I mean, even his most ardent political opponents, nobody, raised the charge against him that he was cheating. He
Right.
paid a relatively small amount of tax, considering the size of how much he's got. He paid a relatively small amount of tax legally by taking advantage of all the loopholes and the deductions and the exemptions that are in the tax code that lets that happen. And so the progressive nature, meaning that the higher your income, the more tax you pay, or the more greater percentage of your income that you will pay. It looks progressive on paper, but in real life, I mean, that's part of what this, we mentioned the ProPublica leak a while back, where some of the most wealthy Americans and all, they had their tax returns leaked. And the whole idea behind doing that was to show just how little these guys are actually paying. And I guarantee you, when they fill up their Learjet with fuel, they will pay the fair tax out of their pocket in great measure. So again, we have got a system that claims to be progressive, but it really isn't because of all these loopholes and deductions that wealthy taxpayers take care of. And something else that wealthy taxpayers take care of that really wasn't mentioned here, they will hide a lot of their income offshore.
Right.
That falls under the tax evasion, which goes away with the fair tax. But anyway, it's just crazy how broken the income tax system is, and people are looking at that. Well, that doesn't affect me, so I don't care. That's what we've got to try to get through and make people realize, whether it's affecting you directly or not, the system itself is broken. The system is badly broken. It is broken beyond repair, to the point where the only way to fix it is to get rid of it and replace it with something better. And that's what we've been trying to do here for, 500 plus episodes on FairtaX Power Radio. Open people's eyes to the fact that you don't have to put up with this crazy system that stifles the economy. You don't have to put up with this crazy system that collects the most sensitive data about you that it can. You don't have to put up with a system that lets people like Donald Trump and Jeff Bezos and Elon Musk get away with paying relatively small amounts of tax. We can get a better system. It's called the Fair Tax HR 25. We need to go with it.
Absolutely. And that's the thing. I think, as we talk about this a lot, is that we as a general public and as the citizens of the United States, none of us are really old enough to remember a time where there wasn't a tax on income. And so we have this thing, this kind of apprehension. We're going, well, I don't know. Can we really, is it something we really, and then the politicians are obviously giving it lip service to some degree as far as advancing it. And like you stated a moment ago, Steve Hayes, our president of FairtaX organization, said it's going to take someone with a big microphone, the president of the United States as the primary example, to be able to kind of barrel through all of the rhetoric that's out there or people that are standing in the way of its advancement.
Right. Well, we're talking about the regressive elements of the income tax. And that's one of the things we hear all the time from people who are either uninformed about how the fair tax works or they're just deliberately misrepresenting it by claiming that the fair tax is regressive, i.e., it hurts the poor, it hits the poor harder than others. And they use the example, well, if Elon Musk and a single mother on Snap bought the same grocery cart full of goods, they would pay the same amount of tax, but the amount of tax paid was a much greater percentage of the Snap mom's income than it is Elon Musk's income. That's regressive. And they just failed to mention that the fair tax is incredibly progressive, again, because you do not pay tax on your basic necessities. The tax you pay at the cash register on your spending up to the poverty level is refunded to you in the prebate. And so people who spend at or near the poverty level pay little or zero fair tax out of their own pocket. And that is overlooked or intentionally suppressed an awful lot. But the fair tax gets rid entirely of those payroll taxes that are applied to every dollar that everybody makes up to a certain cap. And if you make over the cap, then you don't have to pay the tax. You just get rid of the tax entirely and fund Social Security and Medicare from a much broader tax base, i.e., everybody that buys things is now supporting the system versus just people who are working for a paycheck. And so I tell you, there is just so much wrong with the income tax and so much right with the fair tax. It would take us, episode after episode after episode after episode of this program to go through it all. But that's what we're dealing with. We got about 6 minutes left. Let's hit this last program. This is something that Steve talks about a lot.
Yeah, yeah.
The income tax system, as we have it today, hides the true cost of government. And Steve again mentions a lot that a lot of the opposition to the fair tax from Congress comes from the fact that with the fair tax, when you make a retail purchase, if you're buying new goods or services of some kind, when you make a taxable retail purchase, your receipt will show you how much fair tax was applied to that transaction. And that is the cost of government. Right now, people look at this is how much the government took away from me on their tax return, and they think that the tax they paid on their 1044 represents the entire cost of what the income tax system is taking from them. And it's just not true, because we have got so many tax costs, tax liability itself plus compliance costs that are passed on to consumers in the form of higher prices. And you don't see that on the receipt. The fact that fair tax gets rid of all those costs and just replaces those costs actually that are currently embedded in the price of the goods. But you ask people how much they pay in taxes, they don't know. They cannot tell you how much they pay in tax. They have no clue how much the government is actually taking away from them. And the fair tax will change that. And the Congress critters are deathly afraid of that.
Yes, and they're really interested in keeping things just like they are, which is why I said a second ago they basically slow walk, or they keep the status quo moving. If we can just get through the next cycle and things like that, and it does take a drumbeat, and I think social media has helped in the last couple of years advance the conversations around HR 25 to where we're starting to get some positive information, conversations, people asking a lot of questions on social media now about the fair tax, and it's great. And we need to encourage people to go and ask questions, read the bill, and then ask questions.
Absolutely. I mean, people innately understand that when they buy something, the price that they pay for a particular object or item on the shelf includes the cost of the labor and materials that went into making that. It includes the cost of distributing it, the truckers that have to bring it to you and all. But they just don't need to see that the tax costs that every entity that had a hand in bringing that product to you, are passed along in the prices as well. There is just I'm getting all tied up here, just thinking about it. There is just an immense amount of cost that is hidden from people that the income tax system imposes on people that they don't even know it's there. And that's one of the reasons that the Congress critters like it so much, we can hide how much we're really taking from people in this income tax system, and you can't hide it anymore if you pass the fair tax and it shows on everybody's retail receipt.
Sure, without a doubt. You got withholding, you got indirect taxes like gasoline, embedded prices, so you really don't see the tax portion directly on the receipt. We talked about that, how your FAIRtax would actually be, here's your items, here's the subtotal, here's the fair tax, here's the total that you're going to pay out. So you'll be able to see all of the taxes, how the impact of the government, and how layered it is in all of this. Plus tax expenditures, subsidies and deductions delivered through tax codes like credits for special activities, like we talk about on Congress.gov all the time, functions as a government spending item, but aren't debated as direct outlays, hiding an enormous cost.
Mm-hmm. It's just crazy that the government has a system where all this takes place, and the fair tax gets rid of it all. Just pulls the entire system out by the root, replaces the entire income tax system, the payroll tax system, with a simple consumption tax where you don't pay taxes on your basic necessities. You don't pay any tax at all if you spend right around the poverty level. And beyond that, the more you spend, the more you pay. You pay your fair share. There is no downside with the fair tax. There's very little evasion. You can't evade it, and it'll show you the true cost of government. I'll take it. This has been fun, going through and saying what's wrong with the income tax. And if we can just get enough people to understand what's wrong with the income tax and realize that the system is broken and needs replacing, then hopefully we could get the fair tax as President Hayes thinks we might be able to next year in 2027, if there's no flipping of control of Congress in these midterm elections that are coming up.
So make it a point to reach out to your congressman, candidates that are running for House seats, your Senate, candidate, and sit down and talk to them. Go in, comb your hair and walk in there and go, hey, I need to speak with you about this. And what do you think about it? And you can also make the phone call to Washington, D.C., to your representative's office or to the senator's office, and say, I need to know how Representative Blazkowski stands on this particular bill, H.R. 25.
All right. Well, hopefully we can get it done here. And Fred, that's going to wrap up this edition of FAIRtax Power Radio. We are slap out of time again. I have no clue what I'll tell you what I really want to do. I'm going to try to get Steve Hayes and Jade Wally back with us, because there's some exciting things going on. When Steve was with us a couple of weeks on his State of the FAIRtax show, we were hoping to have Jade on. He was tied up with some kind of business obligation. I'm going to try to get the two of them on again, and we could discuss the changes, especially the transition in leadership that's going on at Americans for Fair Taxation. We'll work on that for next week. I'm not 100% sure we can get it. We're going to try. But anyway, until we meet again, that's going to be all she wrote this time around. I'm Bob Paxton.
Bob Scarborough.
We are the FAIRtax Guys, reminding you the fair tax is the only truly fair tax, and once you understand it,
we'll demand it.
So tell me, how could I pay less taxes?
Less?
Yeah, I'm trying to get ahead, so how can I pay less?
Well, I suppose you could pay less taxes by earning less money, or you could give to charity.
How is that going to help?
Actually, I'm not supposed to tell you this, but if you know the right people, okay, or if you have a really good lawyer, you can usually get around the big ones.
If I may, under the fair tax, to pay less taxes, you would simply consume less. You would control how much you pay and when you pay your taxes simply by choosing what you purchase and when you purchase something.
So I could stay focused and get ahead.
Exactly.